hustlers, and in today's video we're going to delve into the financials of the last earnings call with Joby and Archer. So there was loads of you in our streams for both of them, and I want to say a big thank you to the community. And to pay you all back, we're going to delve into the financials, because I know we didn't get to delve too deep into them because it had just been released and we were having too much fun in that earnings call. We did see a sudden price crash in the middle of the Archer's earnings call, and there was mayhem. The price has dropped. I seen people, they were gonna have to sell the house, the mortgage had gone, the car, the kids, everything. They'd lost it all. And we just want to delve into it now to have a look at where the finances sit with both of these companies. So stick along with me. Please hit that subscribe button because it really helps out the Hustle Brother YouTube channel, and we want to keep bringing you this content. So here, I've brought together two tables, and I'm going to try and simplify it down as much as I possibly can. We're going to delve into it to see what were the financials that were released during the earnings call. We're going to see what's happened with Joby and what's happened with Archer and where both of them sit. So I'm going to pull up this table right here. Let's have a look at it now. So let's discuss the cash position. So this is the amount of money that they have in the bank. It's how much fuel is in the tanks for each of these companies to get to commercialization and that part certification where we'll start making some money. So Archer Aviation closed out 2024 with $835 million in their cash and the cash equivalents. And this was the highest quarter end they've ever had on their balance sheet. But here's the kicker. After raising $300 million in Q1 2025, their liquidity jumped to over $1 billion. That doesn't even include up to $400 million more than that Stellantis has agreed in principle to commit to in the manufacturing scale-up, though that deal is still being finalised as it was discussed on the call by Adam Goldstein. But this means that if all goes to plan, that Archer will be sitting on a war chest of $1.4 billion, which in this industry is amazing. And later in this video, we're going to discuss what is the cash burn at the moment so that we can sort of evaluate and see how much money they are going through each year, and what does this 1.4 billion war chest buy us, and how much time do we have left. So similarly, Joby Aviation ended the year with $933 million in cash and short-term investments. Add in another $350 million they raised in Q4 through equity offerings, and they've already got a $1.283 billion, plus they've also got the $500 million commitment from Toyota lined up for 2025. But this is going to be split into two $250 million tranches. If both tranches hit this year, Joby's looking at a potential $1.783 billion in liquidity, and that's a hefty cushion to get us through to the part certification. But this is one point that I did want to bring up from the call. At the moment, we know that they have a deal with Stellantis, being Archer, and Joby with Toyota, but they haven't explained how do they get this money and what do they need to achieve in order for this money to be released. I know on both earnings calls we had Joe Ben and Adam Goldstein, and they danced around the topics. They didn't want to tell us what they needed to do in order to get this money. And that did raise alarm bells for me, because surely you want to let the investors know, how do we get all of this money when it is such a large sum of your liquidity that we assume that we're going to need within the next year or two. However, they have assured us that the money is there and that they are achievable goals to hit in order to really get this money released. But I think this goes to show that both companies are currently sitting on two war chests, and it goes to show why they're such a big companies in the eVTOL space and why there is so much interest and buzz around them at the moment. So now we've got to discuss about the cash burn. So this is the amount of money that they're spending on research and development, manufacturing facilities, and on the running of the day-to-day staff and getting everything over the line. And this is absolutely imperative for us all to understand. So make sure you've all got your notepads out, because it doesn't matter how much money you have in the chest. If you're spending more than you have, you will end up going out of business. Let's discuss now the cash burn for both of these companies. So it's been an interesting one. For Archer, Q4 non-GAAP operating expenses came in at $98.3 million, right in the middle of their $95 to $110 million guidance. That's pretty steady quarter over quarter. No big spikes here, and that's what all of us investors want to see. For the full year non-GAAP operating expenses, they were $380.6 million, and that's up 22% from 2023, driven by investments in engineering, testing, and their new shiny Georgia facility. So the total cash used in operations and investing for 2024 was 450.6 million, as you can see on this table here, including a $50 million payment for their new Georgia factory. But looking ahead to 2025 Q1, they've adjusted their EBITDA loss to $95 to $110 million. And as we can see here, that is staying steady. So they're not expecting the cost to be going up going forward. Now let's switch up to Joby. Their Q4 adjusted EBITDA loss was $119 million, so a bit higher than Archer's spend. That's up $23 million from Q4 2023, and it reflects the growth in their team and their certification efforts. I think we've seen that Joby are a lot further forward than Archer at the moment. Joby are sitting at a stage 4 around 51%, and they're waiting approval from the FAA, whereas I think Archer are about 12 to 13% through stage 4 of their FAA certification process. So for the full year, Joby's cash use was $450 million. So it's almost identical. And it's funny because these companies are literally spending the exact same amount, and that's over the course of the year. Joby landed right in the low end of their $440 to $470 million guidance. But here's where it gets a bit spicy. Joby's predicting that in 2025, the cash use is going to jump to $500 to $540 million. That's a step up, fueled by hiring, research and development, facility expansion in California and Ohio. And I think this goes to show that this is the real push they're going to make now to get through on the certification process. But I think this is something that was going to need to happen. And if this gets us over the line, I'm more than happy for them to spend it. The only concern that some investors may have is that if they don't start getting some revenue in now, it's a big risk for Joby because their cash spend is going to go up. And that means that they're going to get a shorter time period with the liquidity they have in the bank that we discussed at the beginning of this video. So are any of these companies going to bring in revenue? Well, Archer made a massive statement in their earnings call, mentioning that they are going to start generating revenue very soon. Archer have made major waves in their launch edition program. They signed a deal with Abu Dhabi Aviation to deploy Midnight aircrafts in 2025, targeting tens of millions in revenue per partnership. Think 20 million plus per contract. And they're aiming for positive margins. So that's huge. That's going to help boost their cash reserves as well as allowing them to develop these aircrafts in the next year. They're not waiting for FAA certification. They're monetizing aircrafts internationally right out the gate. If they pull this off with multiple partners, we could see real revenue numbers in 2025. And I'm very excited about it. This is something that they just released before the earnings call, and I think it was the perfect time to drop it. This is what one of the major parts of the earnings call should have been about, but it was overshadowed by the huge drop in the stock price. It's funny, once all of the fog clears, we're all sitting here going like, oh, this might not have been as bad as we thought at the time. And I think this is something that I did want to address because I seen a few comments where it felt like we were attacking the retail investors, and that's not what we were doing. What we were trying to do, and we might not have conveyed our point at the time, we were trying to warn everyone that this is what Wall Street does. They sell out, make fear in the market, the stock price drops to the bottom, they buy back in, you've lost your money, and then you just get left holding the baby. They've made money at your expense. So we were just saying that don't panic. Like, if you believed in a stock today, if you believe that Archer and Joby are going to be the next big thing, why would a sudden drop of 20% mean that you have to sell out everything? What we were trying to say is that in the earnings call, there was no catastrophic news. I think there was a mention of earnings per share in our chat. And the next thing I knew, everyone's saying, I'm selling, I'm selling, I'm selling, I'm selling. We're not trying to tell you to buy or to sell. We're just saying is try and block out the noise. Like, sometimes this is what the big whales will do. This is why we need this community, because it's something that happened to both of us. We wish that somebody had just advised us at the time. And that's what we're trying to convey to everyone. So I think there we can see there's a lot happening now with Joby and Archer. And I think that that revenue for Archer could be a big player. There was just one other item that I did want to bring up, and I think we'll probably cover this in a separate video because I think it needs to be delved into. It was a comment from Adam Goldstein in the Archer earnings where he said, I believe the aircraft we plan to build can result in a multi-billion-dollar program of record, all without the need for FAA certification. This is in regards to the hybrid Midnight aircraft that they're going to be using with the Anduril Industries contract. And I think that this could be another revenue stream that they can bring in. And he's saying by the end of the decade, so we're talking in the next 5 years, which is bullish as anything, if I heard. So just to clarify, I think we've discussed both the companies there. You can see that the cash burns are quite high, that they are quite high at the moment. But with the cash reserves there, we have another year or two, which should get us to the stage where we can start making revenue. And once that research and development is complete, I imagine that these cash burns are going to drop quite significantly. It's so funny because at this moment in time, it's really heating up in the eVTOL space. And this earnings call has made me feel more bullish than ever. So thanks all for listening, and you're going to catch me next time.